Hello and welcome to another update video about Ethereum. Really neutral price action at the moment. We see a little bit of sideways consolidation just now. Let's see if anything changes when the US stock market opens. I mean, at the moment we are still holding micro support levels. I would say, it's sort of neutral to bullish right now because we're holding on still a pretty high level. But the market is currently in a resistance area. We defined this resistance area a few days ago. It's basically between $2,800 and $2,900. There are a few Fibonacci levels, and already in the last video I made you aware that we seem to see that the price seems to be oscillating between the $2,800 level, which is the 38.2 extension level that we have here on the chart, and the 61.8 extension at 2,844. So we need a break. It's a small range that the price is currently respecting. But overall, yeah, trend is up, of course. Wild extensions to the upside. I mentioned that yesterday already. Really wild extensions. Not unusual for crypto, but still noteworthy because these wild extensions, I mean, they indicate that obviously a pullback gets more likely, but I would never try to confirm a pullback without having some concrete evidence for it. I think it's due. It's due. So it still needs a break below certain levels, and we are going to take a look at that on the 30-minute chart when I zoom in a minute. But yeah, overall, the yellow structure still is my preferred scenario until support levels break. These support levels here, yeah. So in the yellow count, we are dealing currently with a potential 5-wave pattern to the upside. I see this potentially as a leading diagonal. But yeah, it would be a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5 I'm tracking. So the fourth wave pullback ideally does not break below 2,532. That support level hasn't changed from yesterday. It's a 50% retracement already below that level. This assumption for a fourth wave pullback, yeah, it's questionable. It gets questionable because a fourth wave, even in a diagonal, well, ideally doesn't break below that level, and certainly shouldn't break below the 61.8 retracement, the golden ratio level. That will make me take it off the chart probably completely. I don't want to see a fourth wave, even not in a diagonal, that sustains below the 61.8 fib level, okay? But yeah, also it wouldn't have the right look anymore. It's also possible that when we get a pullback, the market will respect the ascending trend line there, the lower boundary line of the trend channel here. That's currently at around $2,600 if we get a pullback now. Very close to the $2,605 level, the 38.2 retracement. Typically an ideal target for a fourth wave, also in a diagonal. And then one more high seems likely. But at the moment, there is no strong sign of a pullback. In a more bearish possibility, we moved up only in 3 waves. I mean, it is only a 3-wave move. The difference is in the yellow count, we should get one more higher low and one more higher high. And then only after that, I can add another support area. And we would call this a wave 1, this 5-wave move. And the pullback would be a wave 2. And it would hold a higher low. In the bearish count, short-term bearish, we can only confirm that, by the way, with a break below 2,460, it would be a C wave to the downside, and this wave 2 that presumably finished on the 23rd of January never finished. But it would still be part of a bullish scenario. So I've got 2 bullish scenarios here. One of them is just short-term bearish. And then in the very short term, yeah, I'm not entirely sure what this is. It could be that some kind of a triangle is forming here. Yeah, lower highs, higher lows. That would rather suggest trend continuation, but it's difficult to say. The price data is just not enough to do any labeling from here. What the Elliott Waves allow us to do here is to track the support area and to identify that we are in a third wave. Okay, maybe it's finished, but there's no evidence for it yet. Certainly the risk is higher now, given that the market is trending around this Fibonacci resistance range and around the upper boundary line of the trend channel. And also the upside structure looks fairly complete, but extensions are always possible. You just can't really plan for them, for these extensions. And I would say key level to watch for in terms of support is obviously 2,460. Below that level, I have to confirm the white count, which might offer another possibility to add But at the moment, I think the question is, okay, have we topped or not? I think it's a possible assumption, but I will not confirm it until we see a break below that 2,761 level. Then it will seem more and more likely, at least, that this fourth wave pullback has started. But we'll see. It's very neutral at the moment, consolidating on a high level, really, since yesterday's update. Not really much to add because it's just been trending sideways. So yeah, and next levels to the upside. So again, as long as we hold above 2,761, I think one more high is also a reasonable assumption, and it could take us to the next Fibonacci levels there, around $2,900. That's my update about Ethereum. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.